Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time, guys. This week's topic is Fork That Trade, Candlestick Formations Explained, Part 2. Part 2. All right, it's very rare that I do lectures that are two parts, maybe 3 or 4 times in the last 300 or 400. I'm not kidding. When I say that, I just didn't have enough time to finish last week's lecture. It was some 25 or 30 slides. So I decided to cut it up into 2 parts, and this is part 2 of it. It's a wonderful lecture. It's one of the more powerful technical lectures that I've done in a while, and I would highly encourage you guys to sit and watch through it. Look, you can check YouTube analytics all the time, right? And I look, and most people log off after 5 minutes. Why? Seriously, I'm just going to say something mean and rude. What's wrong with you? These are college-level lectures for free. For free. You can go watch your Google advertisements all you want about some asshole idiot saying, oh, I can turn your $100 into $1 million in 10 seconds. No, they can't. These are actual lectures to help you become a better trader. Hour-long lectures, PhD-level lectures for free, and you guys are logging off 5 and 6 minutes into them. It's insanity. Are you not serious about becoming a great trader? If not, then don't even watch 5 minutes of it. All right? I'm just commenting because wink, wink, these lectures aren't going to be around all that much longer. Oops, I let the cat out of the bag. Okay, oops. Anyway, I hope you enjoy this lecture. If you like them, click the like button, hammer the subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is Fork That Trade, Candlestick Formations Explained, Part 2. Part 2. I haven't done a lot of 2-part lectures, and literally in the hundreds. I've done somewhere in the neighborhood of 400 or 500 lectures, and in all the lectures I've done, there might be 3 that have more than 1 part to them. So this is unique and unusual, but let's dig in. So last week, and this is just a very, very quick recap, last week we talked a little bit about Fork That Trade, why am I so accurate, and then we went into kind of understanding candlestick formations, bottoming tails, topping tails, wide range bars, prior pivots, right? We talked about candlesticks in context, right? Topping tails, bottoming tails, where they happen, how they got there, etc., and so forth, right? Different candlestick bars, etc. I'm going through each slide very quickly so you guys can just see them. Then we talked about different types of pivots and how they form, double bottom retests, topping tails, sell setups, wide range ending bars on volume. Then we also talked about things happening over a longer period of time, right? The longer period of time something happens, the more potent it is because there's more people over it. It's why, for example, a daily chart is more potent than a 5-minute chart. It's happening over a longer period of time. And we talked about level and depth of penetration, location, etc., and so forth. And we had some examples, right? We talked about a couple of these. And then we ended, I believe, this was the last slide I think we saw last week, where we talked about the retest of this and then this flat top breakout over this area. And then we talked about the message that this stock was sending. And a lot of people are like, oh yeah, I'd buy that 3-bar play up here. Remember that conversation we had about this 3-bar play up here? And then I said, well, let's drill down, or drill up, I should say, to the 60-minute. And then all of a sudden, your 15-minute 3-bar play is now 1, 2, 3, 4, 5, 6, 7, 8, 9 bars up on the 60. And now you're buying 9 bars up on the 60. So the multiple time frame analysis came in. So now we're going to change gears slightly, same general topic, but change gears, and we're going to move into successful trading traits and when you should have a very good understanding of if a stock is going to work or not. Now, I understand the first comment that people are going to make is, well, what if I'm an all or nothing trader? Then there's nothing you can do about it. You're going to sit there and take it on the chin. However, you might get to a point where you're an all or nothing trader, but if these entry or exit criteria hit your checklist, you might give yourself reason to get out or sell half. Now, I'm not saying you should do that, but I'm simply saying this will make you a better trader, even if you're an all or nothing trader. Why? Because this is going to help you be more in tune with the chart. Now, you won't be right 100% of the time, but you might be able to fine tune your trading to where if these things happen that we're about to talk about, maybe you get half your position off. Maybe you get all of it off. I don't know. But for the people that aren't all or nothing traders, this is extremely valuable stuff. So if we take a look at 3-bar plays and breakouts, now again, we could apply this to other patterns, but I take a lot of 3-bar plays and breakouts, and I do take some pullbacks as well. But before the entry, we're looking for clean patterns, right? We don't want overlapping slop, and we talked about that earlier, right? And that was last week, obviously, when I say earlier, but we talked about bars that overlap with topping tails and bottoming tails and so on and so forth. And when you get that, it's much harder to break through that, right? It's sloppiness. It's a tug of war that's happening, and you don't really want to see that. You want to have relative strength or weakness to the market. I've said this many times in the past, and I'll say it again today. For me, okay, this is one of, if not the single most important thing I look at. If you give me relative strength, and then you give me the next thing right under it, a bottoming tail or an engulfing bar, shit, sign me up. I really don't care that much more about the rest of the pattern, honestly. Now, there are caveats to that. I don't want it to be 9 bars up on the 60. I don't want it to be climactic. But that aside from those extreme things, if you give me relative strength and you give me some form of bottoming tail or engulfing bar, I am going to stare at that and find an entry in it. Period. End of discussion. Okay? So these are the things I want to see before I get in. Is it above resistance or below support if you're short? Is there an igniting bar if it's a 3-bar play? Is there resting volume if it's in the middle of a breakout? So these are all the things you're looking for before the entry happens. But once you see all of these things and then it triggers, then it becomes, should I fork this or not fork this? Right? So we have all the things we want to see before it happens. But it doesn't always play out that way, right? You could have a perfect pattern that fails. It happens from time to time, okay? Rare, but it happens. So before entry, you do your homework. You do all those things. But then once you get in, if there's not a quick quarter-hour, half-hour move, quick, first few minutes, that's a warning sign, okay? If you don't see some form of volume spike, that's a warning sign. If you don't see an immediate or sudden topping tail, that's good. If you do see an immediate or sudden topping tail, that's a problem. Why? Because if you're in a 3-bar play or a breakout, the whole concept of this there's twofold here. One, they're momentum trades, so they should just hit and run. That's number one. And number two, by definition, in theory, by definition, for a stock to break out, it took out the majority of the sellers when it broke out. That's the whole point, right? When you think about a breakout, it's sitting there for 5 bars, 10 bars in a row. Buyers and sellers are fighting. Buyers and sellers are fighting. Buyers and sellers are fighting. In order for the stock to break out, the buyers have to win that battle, by definition. So if they win the battle, but immediately after winning the battle, you see a topping tail, you're going, whoa, wait a second. There are more sellers here than I initially or originally thought were here. Or the sellers duped you. They just, the bid led up, right? Sorry, the offer led up, and the stock popped, and all of a sudden, sellers came right back in. That is not what you want to see. That's a problem, okay? It should hold above break even for the first 3 to 5 minutes. It should. It should have a quarter-hour plus on the pop. It should have a volume spike on the pop. It shouldn't have a topping tail. And it should hold above break even after the initial pop. And if you notice and remember what I said on Google today, Google popped about, 17 cents, was it? Something like that, on a 75-cent stop. So not quite a quarter of an hour. And immediately dropped below break even. Now, it wasn't significantly below break even. It was like 10 cents. But it immediately pulled back. And what did Google ultimately do? Didn't work. It went 1R and came all the way back down. Now, note, this is important. Be mindful of your surroundings. Be mindful of market conditions. Sometimes a good trade is simply one that doesn't fail with the market. I want you to reread that for me. Reread it. Say it out loud. Sometimes A good trade is simply one that doesn't fail with the market. So if you get into a trade and the market tanks, but your stock holds just below break even, it could still be a great trade, right? I mean, if the market has some nasty news that comes out and it starts pulling back $1 or $2 and your stock's just chilling, hanging around break even or better, that could be an actual sign of relative strength and a reason to stay in it, not to get out of it. And I've seen it happen sometimes. People will send me an email like, Jared, what happened to this trade? And I'll look at it and there's nothing wrong with the trade. The market just got absolutely demolished. You know where I'm going next on this. There are 5 market scenarios that can happen, right? 5 market scenarios. Extreme strength, normal moderate strength, sideways chop, normal and moderate selling or pullbacks, and then extreme selling. If you're long in a trade and we have, quote, extreme selling, very few stocks are going to hold up to that. But the other 4 scenarios, your stock should be okay. If it has genuinely good relative strength, your stock should be okay. If the market rips, great. If the market goes up slowly, great. If the market's sideways, great. Even if the market pulls back a little bit, your stock should be okay. A good example of that was AMD this morning. AMD didn't really care much what the market was doing. It just kind of moved higher today, even when the market had a couple pullbacks. That's what you're looking for. So if you don't see this before the entry, you shouldn't even be in it. But if you do see all of that, and then after the entry this happens, I'd be very concerned. These are guidelines because nothing works 100% of the time. I know you guys all want that, but it just doesn't work that way. So let's take a look. Bad break won't work. What do we have here? We have an okay 3 or 4 bar play. I say okay because bar number 2, I'm on the right-hand side, by the way. Bar number 2 is a little bigger than we'd like to see, right? That little bottoming tail there is a little deeper than what we want. But then you get a 3rd bar kind of in the upper range, and you start thinking, okay, this is an interesting idea. It's at a whole number. It's gapping up. It's starting to put in higher low right here, and even there's a higher low. What happens? It peekaboos. This is a stock where you're looking at a legitimate $3 stop loss. $2.54 is the entry. $2.51 is probably the stop loss. It peekaboos over by what, 50 cents? Somewhere around there. And then immediately pulls back, tug of war, topping tail again, right there, big topping tail. Then you get a green bar and then boom. And what happens? It doesn't work. It pulls back and stops you out. Now I'm on the left side. It pulls back and stops you out right here. Tries to retest the high, which is bullish, and then fails. So, peekaboo break less than a quarter hour. Not good. No volume increase. Take a look, guys. Draw a line here. Let's do this. Right there is your entry. That's your entry bar. And you get a tiny, subtle, right? A tiny, subtle little spike. But not the spike you're expecting. And then on the next bar, lower volume. And next bar, lower volume. Guys, these bars right here, this one right here, okay, and this one right here, they're supposed to what? Have higher volume. And they don't. So where is the commitment from the buyers? It doesn't exist. It's not there. We broke the whole number, which is an emotional, psychological threshold. And what happens? Stock goes nowhere. Where are the buyers? Nowhere to be found. So if there are no buyers to be found, we have to assume that there are more sellers than buyers. Now, this could simply be just a lack of buyers. Maybe there's not a huge number of sellers. It's just a lack of buyers. But either way, it's a sign of weakness and lack of commitment. So it pulls back. Didn't stay above break even. You are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars into this trade, and it stays below break even, basically. And it likely stopped you out. Lots of topping tails. First 3 bars of topping tails. This is a walk-away trade. It's a walk-away trade. You start seeing this, that's it. Now, the only other scenario I can think of is if the market, if you got into this stock and the market just absolutely got crushed, right after you got in, and it kind of held. But the truth is, once you see those topping tails, get out. And it would have stopped you out otherwise, either here, and if it didn't stop you out here, it definitely would have stopped you out over here. Just goes back to that checklist I just gave you. So, questions to consider. What does the current candle tell you about the trend or the bars? What does the current candle tell you about the prior bars? So, when I'm talking about current candle, this can be used at any point, anywhere on the chart, okay? But I am specifically talking about upon entry. That's what I mean when I say, what does the current candle tell you about the trend? So, obviously, we have pre-trade or pre-entry checklists. I want to see bottoming tails. I want to see a volume spike. I want to see a picture of money, a turnaround bar, etc. And that is also looking at the current bar. But now, specifically, I want to know, what does the current entry bar candle tell me about the trend? Does the entry bar candle show commitment and volume or not? Is it showing me a topping tail and a lack of volume? Is it holding above break even? What does the current candle tell you about the prior bars? Okay, every candle provides more information, right? So think about it. More information is more reliable and objective trading. More information either confirms or contradicts our expectations. You need to reread this. More information either confirms or contradicts our expectations. It really can't be in between. Seriously, it really can't be. Because when you think about a breakout or a 3-bar play, the entry bar is either going to pop and do very well, confirming, or it's either going to pull back or go sideways, both of which of those contradict our expectation. Our expectation is that buyers are going to come into this thing once it breaks resistance. So once we break 254 on the last slide, the expectation is buyers are going to come in a big way because we have eliminated sellers. And when you eliminate sellers, there's no one left to sell into you going up, so you should see a wide range bar. So that confirms expectation. But in the last slide, it contradicts expectation because we see topping tail, topping tail, topping tail, and little to no price movement and little to no volume. That's a contradiction of expectation. That's a problem. Okay? This is why we tell newer traders to wait 15 to 30 minutes before trading. Why? So you can get more confirmation before the entry. It's very difficult to take a 1 or a 2 minute 3-bar play at 9:33, 9:35 in the morning. There's just not a lot of information. That's why we tell new traders wait for 9:45. Things settle down a little bit and you have more confirmation not only from the stock but from the market as well. See what I'm saying? So we want to see more confirmation than less confirmation, especially if you're newer because you're not reading the candlesticks as clearly as a professional would. You don't know enough about bar-by-bar analysis to be successful early on when you're new. You don't. You just don't, okay? So patience usually pays off because it provides more reliable trades. All right? So waiting longer is a benefit to most traders. I would say 15 minutes is good, 9:45, and then trade till 10:30, something like that. So now, just remember, ask yourself the question every time before and after entry. Am I getting confirming expectations or contradictory expectations? Not the expectation, but the expectation is one thing, go higher. Is the stock, is the bar confirming that, or is it contradicting that expectation? Ask yourself that every time. Next, wide range bars equal momentum, and volatility is, I shouldn't say are, I don't know why that's in there. Let's try this. I guess I get it. It's both. Momentum and volatility are. It's both. My bad. Anyway, wide range bars, momentum and volatility are increasing. Yes. Volatility doesn't necessarily mean it has a 50-cent spread. It just means quick, fast price action, preferably and hopefully in your direction, right? So the momentum moves up and volatility increases, but it increases in your direction. Narrow range bars equals volatility is low and momentum is decreasing. This is that tug of war we talk about. This is like we saw the market today for what? 10, 15 minutes. It stayed in like a 90-cent range or even tighter than that. The volatility was extremely low, and we're waiting for volatility to pick up because when volatility is low, price movement is narrow. most of the time, okay? And when price movement is narrow, it's very hard to make money because there is what? A lack of follow through. So we want to see volatility. Not crazy, wild, whippy FOMC volatility, but we want to see volatility. You need it to get price movement, okay? We don't want to see large retracements, 60, 70%. Guys, honestly, and most of you probably haven't done this, but this goes back to treating this like a business. How many of you, and it just appease me, and it's okay to say no. I'm not going to get mad at you. I promise you I'm not going to get mad. How many of you have ever back tested how many trades go minus 0.75%, let's call it 70%, go minus 70% against you and still work? Say you have a $1 stop loss, $1. How many of you have back tested when a stock goes 70 cents against you and still actually works? How many of you have done that back test? Yes or no? Yes, I have. No, I haven't. Talk to me. I want to hear from the peanut gallery. Almost nobody, right? And I'm not getting upset at you. I'm not mad at all. But don't you think it might be or could be useful or helpful? All right? Why am I saying this? Because, for example, again, this is hypothetical. If you went into a trade and you found that if it pulls back 70% and it only works 10% of the time, after it pulls back 70%, wouldn't it be potentially a good idea to do what Jeff used to do and just maybe share size for the $1, but raise your stop to 3/4? You're saving 1/4 of an R. Now, again, I don't know the exact parameters, but if you found that over 500 trades, if it goes minus, 0.7R or 0.75R and then it works less than 10% of the time, wow, you could save yourself maybe a couple R a month potentially. But again, you have to back test it. My point I'm making simply is, this is a business. Do the math, do the homework, do the work, because you might come up with something that is, I don't want to say life-changing, but could potentially make you an extra 10% a year, 20% per year. Just something that simple. By looking at, okay, well, how many go minus a half R and still work? It might be more than you expect. It might be less than you expect. And you start doing the math and you're like, well, wow, if it goes minus a half of an R, it only works 22% of the time. Well, then all of a sudden you start doing the math and you're like, you know what? Maybe it's better. Maybe it's better if I just go to a half stop. Share size for 1R, but go to a half stop. So do you understand where I'm going with that? It's something to consider because you're a business owner, and that's something that potentially is, quote, a cheap way to make more money. A cheap way to make more money, okay? So potentially means the original strength we saw has been negated. In this case, we'll look for a topping tail, change of color bar, or volume to confirm our thoughts. Why do I say this? Because if you're in a trade that's supposed to go higher and you see a massive topping tail, or you're green and you see a red change of color bar, or a lack of volume, you might just raise that stop up, and it might help you save some money. Remember, not everything we're talking about here is about saving a full R. Sometimes it's saving half of an R, 3/4 of an R, 1/4 of an R. It's called saving money, right? And if you can save a half of an R frequently, big picture, that might save you a lot of R at the end of the year. Now, again, you have to do the back test. You have to do the back test. But you understand where I'm going with this. We must consider the larger trend, 60-minute or daily, suggests what? If it's a higher power trend, uptrending, buyers are in control, that's good. But we still have to look at the lower time frame as well, right? We also have to look at the higher time frame to see what is happening there. Are we getting close to a higher time frame resistance area? You forgot to look at the higher time frame. What the stock is doing in relation to the market is also very important on all time frames. On all time frames. Okay? Key point, circled in green. This isn't just used for entries. It's always used during the trade. At every time, every new bar that forms is new information. And that new information either confirms or contradicts your expectation. I want to repeat this. Every new bar is new information, and that new information either confirms or contradicts what you were thinking, okay? So use that information to determine if the trade is more or less likely to work, okay? Let the bars speak to you. Don't speak for them, okay? That's not in the middle, is it? So strange. Anyway, right? So let the bars speak to you. Don't put words in their mouth. Do a little back testing on top of this as well. You start seeing 50% pullback starting to fail 80% of the time, you might want to move your stop to half of it, minus half of an R, potentially. I'm not giving you permission to do that. I'm giving you permission to take a look at it. Okay, now let's take a look. So here's another example, bar by bar considerations. So on the left-hand side, we have what? 3 red bars, lower high, lower high, lower high, lower low, lower low, lower lower, kind of an equal low. So we look at this, and right here is potentially a buy setup. It has not triggered yet, but it's potentially a buy setup. So then you kind of take the arrows and go to the right, and you see the same bar or similar bar, and then all of a sudden it triggers. It starts to go higher. That's a good start. It's a good start because the bar is completely green with very little tails, and the level and depth of penetration into the next bar is about 80%. And it did not put in a lower low here. So buyers were already starting to step up right here. They stepped up early enough that we didn't even put in a new low. Good. The next bar triggers and does about an 80% retracement into the prior bar. That's a good start to a trade. Okay? Now, if we continue this, I should have put more arrows here, right? And same bars, and then this happens, even better. Why? Because we're continuing to what? Move into enemy territory and continue going. We're not getting stopped by the enemy. Every time an enemy presents itself, we take it over. We keep moving forward. We keep pressing forward. We keep pressing forward. Okay? So when you look at it like that, that's good. That's exactly what you want to see. The stock is doing what you hoped and expected it would. It's confirming your expectations. Good. Now what? Now, I know they look green, but whatever. What if this happens? You get in, first the trigger bar, which is here, the trigger bar, looks great, right? Looks really good. And then the next bar goes bam and does 100% retracement of the green bar. This is a problem. Does it guarantee the stock is going to stop out? No. But if it does this bar right here, right, and it does so in a market that's not doing so, that's a problem. Let me repeat that in case you missed it. If we see an engulfing bar right here, and it's doing this engulfing bar in a market that's kind of strong or sideways, that's a problem. If the market happened to put in a wide range red bar and tank, well, okay, oh well. That's different, right? That's in context. The market got really weak, really quick, unexpectedly, and your stock is reacting to it. Over here, let me get your opinion. What if this happens on the right-hand side? Is this a positive or a negative or a neutral feeling right here? This last box, bottom right. Positive, negative, kind of neutral. What do you guys think? Talk to me. What's your feeling about this bar? Remember, we're already in the buy setup down here. The second bar happens. We know the second bar is good. But if you see this, what's your thought? Positive, negative, neutral? We have a negative and a positive, okay? Not great, depends. Well, assuming the market hasn't done anything unexpected, Owen, let me throw that in. Assuming the market hasn't done anything unreasonable or unexpected, the market's kind of just going about its business, and you see this bar. Positive, negative, unexpected. Ticker thinks bottoming tail. Owen thinks negative. Nothing until it breaks the red candle's high. So you are fairly neutral then, Jordan. You're just kind of, all right, wait and see attitude, all right? Neutral, it's a higher high and a higher low, but not significant. Ooh. Guys, I want you to note the people that gave longer answers. Think how they're thinking. That's nice. See how they're thinking through this? This is what you need to do. You have to think through every bar in context to the previous bar and the bigger picture. Both. You can't just look at the big picture and you can't just look at the previous bar. You got to look at both. So, let's take a look. Now, in relationship to the previous bar, this isn't the world's best sign. It's not terrible, but it's not really great either. In relationship to the whole picture, it's not that bad. See where I'm going with this? So right there you have a little bit of what? A stalemate, a little bit of a tug of war. Because in relationship to the previous bar, it's not really what I wanted to see. I'd rather just see this thing go. Like, see this on the left-hand side? I'd rather just see it go, right? Of course you would. Nobody wants to see a stock fight. You just want to see it go. But in relationship to the picture, it's still put in a higher high, and the level and depth of penetration here to the red bar is pretty good. This is a wait and see. This is a do nothing. This is a neutral feeling. You're sitting there going, well, it's not totally negative because it did put in a higher high, and it's not totally positive because, well, it didn't just rip higher. It's a neutral, do nothing, wait and see for the next bar. Got it? All right, now, let's take this one step further. Same start on the top. The top doesn't change, right? This is the same as the last slide. Now the bottom. Okay? What if, and then for some of these, obviously it would have to be a daily chart, right? If you had a daily buy setup and this stock gapped up, and then did that. What's the general feeling there? Now again, to caveat, assuming the market is not doing anything unusual, assuming the market doesn't have a 2% down day, assuming the market's just having a regular day, and you see the stock gap up, which is good, but then completely rolls over. What's the thought process here? Gaps up, that's good, then rolls over. This is going to be a two-part question. I'm going to give you a hint. Right now, what you see, what do you think? Positive, negative, neutral? What's your opinion of this? What's your opinion of this? Positive, negative, neutral. That's question number one. There will be a second question. There will be a second question. Don't be shy. Don't be bashful. Positive, negative, or neutral? Come on, guys. It's an easy answer. It's an easy answer. Very easy answer. Come on. It's negative. Okay? It's absolutely negative. There's nothing neutral or positive about this. If you gap up and fail, and it's not a mega gap, it's negative. Period. Why is this so difficult? Okay? Thank you, Jordan. Failed break, looking lower, negative. Why is Jordan the only one to get this answer right? Seriously, I know I'm being a little uppity, but are you kidding me? You are moving higher. The stock gaps up, positive, 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 and then it can't hold that and fails. How could that be neutral or positive? It's negative. Now, the next question is, what are we going to do about it? The next question is, what are we going to do about it? Are we going to sell the stock? Are we going to raise the stop? Right? What are we going to do about it? We know the bar is negative. The general picture is not as negative. This is the first kind of warning sign. What are we going to do about it? It's tough, isn't it? Are we going to do nothing? Are we going to get out of the trade? Are we going to maybe raise our stop loss up to the low of the bar? What are we going to do? Now remember, I was clear about context. The context is a market that didn't do anything special. No big gaps up or down in the market, just a normal day in the market. So we can't say, oh, well, it's the market. We're pushing the market consideration out. Okay? For me, this is a wait and see. If you are really nervous, you could go to break even on this, right? We could do this. For me, it's a wait and see. If you are super nervous on this, you can move your stop loss to right there. That's break even, right? That blue line, that blue arrow is break even. If you were super nervous, you give it under that bar's low and give it a little bit of space, right? But for me, wait and see. This isn't a deep enough retracement to be super concerned. It's certainly concerning, right? I don't want to see this. But at the same time, it's not a huge level and depth of retracement into the prior day's bar. So for me, I'm not happy about it. To be clear, I'm not happy about it. And if I was genuinely concerned, I would just go to break even on this. So you have a choice. You can keep your stop at the original area, right? Original area, and say, you know what? It's still okay. Or you can move it to break even and just give it just a little bit of wiggle room. That just depends on how strongly you feel about the larger picture, how good you think the bigger picture of this trade is. Now, what about the middle one? What about this one? Same thing, except we have a more positive and a more negative situation. The more positive is this second bar here, the second green bar, is pretty potent. Yes, it left a topping tail, not good. But the level and depth of penetration and retrace is actually quite good. And it still ended the day in the upper 60%, whatever you want to call that. But then this happens. Now what? For me, this is a walk away. This is walk away. I'm done. Topping tail, 100%, I'm done. I'm not even going to wait. Okay, hold on. Right here. Just draw the line on it right there. Let's make it pink. You can save yourself about a half of an R here. You can save yourself about a half of an R here. Literally the next, what you do is, if it's a swing trade, at the end of the day, you put your stop loss right under that low. Maybe you get lucky and it gaps up. Maybe you get lucky. Maybe it gaps up. If not, you save about a half of an R here. Right? Save about a half of an R. This topping tail combined with the size of this engulfing bar is deeply concerning. You know? Deeply concerning. I don't like this at all. And I would be okay losing a half of an R on that. Okay? This one, I think we all can agree, is pretty bad. And the problem with this is there's nothing you can do about it. See what I'm saying? We all agree this last one is bad. But you might save a quarter of an R, a tenth of an R, not much. Right? You have this green bar, which was awesome. Great green bar right here. Awesome. But then it gaps down 60% into the prior, into the green bar and then continues lower. This is one, okay? Here is another angle on this. Here's something you could do. Upon seeing this gap down, upon waking up and seeing the gap down, you could simply do this. Raise your stop loss to the prior bar's low right there. Okay? See where I'm going with that? When you wake up and you see this gap down right there, and you're like, damn, wow, 50, 60% retracement into enemy territory. I'm simply going to put my stop loss under that bar's low. Because if it breaks that bar's low, I really don't want to be in it. And that would be about a quarter of an R loss. And then most likely what happens is it probably fully stops out. So you still give it a tiny bit of wiggle room, right? A little bit, because to do so doesn't really cost you much money. Cost you a quarter of an R to give it a little wiggle room. Could you go to break even? Yeah, you could, right? But maybe you just give it under this bar's low and you walk away. Okay? That's how you have to read these charts. Okay? Damn, I still have a lot more slides to go. I can make this 3 lectures. So let's take a look. Let's take a look. All right. AMD just got really jiggy. I don't know what just happened there. Man, 9 cents from 4R, and you guys take a half R out of it. Ouch, man. That is just, that's a Mike Tyson shot to the gut. So, red bar here, resistance. Note, we have buyers stepping up down here, bottoming tail here, okay? And then it breaks out, right? Moves back up, chops, and breaks out. But on the breakout, it leaves a big-ass topping tail. Note, 50% topping tail. Bar number 2, red bar inside of bar 1, not positive. Bar 3, doji bar, but it breaks bar 2's low. So here's your initial breakout bar, leaves a big-ass topping tail. Bar 2, inside of bar 1, and it's red, not good. Bar 3, lower than bar 2's high, and lower than bar 2's low. That's not positive. What does this all mean? This move lacks follow-through, momentum is slowing, buyers are less committed. What's the likely outcome? So you're going to get a pullback. Danger equals higher chance of stopping out. So, couple possibilities here. You could move your stop loss to here, right? Let's make this, I don't know, let's make it green, right? You could move your stop loss to here. You know, you probably had it down here, but you could move it to here because if it takes out that area, you really don't want to be in it, right? You could move it to break even, right? Because remember, this is a doji bar, so it ended the day in the middle. So you might say to yourself, you know what? The last 3 days have not been very good on this. I'm going to move my stop to break even. Does that make sense what I'm saying? Because remember, it went below break even by a little tiny bit, but it finished the day in the middle of the range. And you go, okay, I'm going to give this thing one last chance. It looked like crap with the topping tail. It looked like crap with the red bar, and it looked like crap with the doji bar. I will move to break even, which gives me a little bit of wiggle room, not a lot, but a little. And if it breaks that, I'm out of town. I'm moving out of Dodge. Okay? Make sense? Hope so, because I got to move on. Now, we have a stock on the bottom left. Choppity, 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 chop. Right? That's what it looks like. Chop. Moves up with a wide range igniting bar on volume. Good. Right? Takes out the prior pivot. Okay. And topping tail, but immediately gets bought back up. Red bar, but immediately gets bought back up. So now, we have a different opinions, I guess. Different information with each one of these topping tails. The first topping tail is deeply concerning. So, let's use the same logic we used on the last slide, okay? This stock peekaboos on the breakout. See it right here? It peekaboos on the breakout and then pulls back below break even. But bar 2 of the breakout leaves a bottoming tail. You're like, okay. Then what happens? The stock, I don't know if there's news, but this is not at all what you want to see. So when that comes in, I am deeply concerned at this point. So if it were me, I would be trying to find an exit strategy. The problem is how, where, what. It's easy to say, right? It's easy to say, I would put my stop loss right here. Let's make it green so you can see it. It's easy to say that I would put my stop loss right there, but you really can't. By the time this red bar gets done finagling around and just going crazy, there's nothing you could do. So this is one where, while I really don't like what I'm seeing, there's not a whole lot you can do about raising the stop loss. And it ultimately actually stops out. If you had your stop under the low, it actually stops out. Then it moves back up. This topping tail is concerning only because of what happened over here, right? It's 3 bars up. This is the 4th bar, leaves a topping tail. So I'm a little concerned. But the next bar is really strong. And the next bar, red, but still inside the strong bar, green. Okay. And then this one right here. And then, boom, breaks again. Now, 2, 3 bars up, topping tails. Concerning. You might want to start your bar by bar. But the good news is it doesn't put in a lower low. It's still above, even the close, it's still above the prior bar's high. Another topping tail. Now I'm really concerned. Now I'm definitely raising 2 topping tails far from the moving average. 2 topping tails. We'll get to the third one in a second. 2 topping tails far from the moving average. I'm raising my stop. Right? Trail this bad boy up. Again, if you're an all or nothing trader, you're just going to sit back and take it. Then you get a third topping tail. I mean, the message is getting clearer and clearer. While it is putting in a higher high, it is a topping tail. You're going to get a pullback. Is this pullback bearish? That's the question. Is the pullback bearish? Yes or no? Is the pullback bearish? Yes or no? Good. You know, let's be honest here. You guys all looked at Jordan's answer. You're like, he's always right. He's always right. He's like that kid in the class that's never wrong. We're just going to go with what he said. Why don't you just next time, instead of saying no, just go what he said, right? What he said. It's true. This pullback, oh, Sophia, don't get upset. It's okay. It's okay. Look, I don't like the Asian hate, Sophia. That's Asian hate straight up right there. Just messing with you guys. Chill out. Go back. Get out of your safe spaces. It's going to be okay. Next, what happens here is a pullback, right? And the pullback, one, stays above the red line right here, stays above the moving average. Oh, and by the way, hold on. And by the way, holds the trend line, right? Holds the trend line. So there's no real issue here, right? It's staying very close to this. It pulled back enough to the moving average. Okay, let's get rid of that for a minute. So there's no real reason to be concerned. This is just a strong stock that needs a break. That's it. It's a hard-working stock that just needs a little bit of rest. It's lunchtime, it's break time, it just needs a break. That's it. Don't take this for anything more than that. Don't take it for like, oh my gosh, this stock is so weak. It's not. And it proves that by putting in a big green turnaround bar. And then moves higher, gets a little choppy, tug of war's happening, now it's pulling back. Now, guys, what's beginning to happen? What's beginning to happen? Here, let's just put this in here. Where is that at? There it is. Right up here, okay? No fill, outline pink. Let's make it wide. What's beginning to happen? Talk to me. What is beginning to happen? Thank you, Owen. Those are the exact words I was looking for. Momentum is slowing. We don't know if it's a stage 3 yet. We do at the double top, right? But let's move this over for a second. I don't know it's a stage 3 right here, though, right? Does that make sense? Like right here, I don't know it's a stage 3. But I definitely know momentum is starting to wean. It's starting to slow down, right? And I know this for a couple reasons. One, it's starting to pull back to the moving average, which is not terrible. It's not terrible. But note, it stayed above the moving average all the way up to that point, right? It stayed, again, the moving average is not bad, but it's the first time it's touched the moving average since we broke out. So momentum right there is a concern. It put in what? See it right here? A weak new high. After the weak new high, I'm also getting lots of overlap, not the clean pullback, and I'm breaking below the moving average now. So think of how we worked our way through this slowly. We touched the moving average the first time we did since the breakout. Small concern. Weak new high, bigger concern. Sloppy overlapping pullback, big concern. Breaks the moving average, big concern. We have 4 markers right here that say, whoa, be careful. So now, once we see these markers, if you want to call them that, right into here, what is our thought process about what, if we're expecting a transition, what would be the next thing we want to see? If we're expecting a transition, what do we want to see? We already know the momentum is slowing down. We have 4 reasons it's slowing down. But what would be the next thing you'd expect or want to see if you think we're transitioning? Come on. It's right out of PTS, right out of the book. It's right out of the book. Right now, I'm talking about the orange box. I'm talking about the orange box. We're not past the orange box yet. We're still in the orange box. I'm trying to predict the future. The next thing you want to see is an RNF, a retest and failure, right? The next thing you want to see is for the stock to retest the high and fail, right? And that's exactly what it does right here. It retests the high on some volume and fails. Then, now you start going to yourself, okay, we are definitely transitioning. I have 4 reasons that momentum is slowing. Now I put in a double top retest and failure. Now, do I want to short it right here? No. You're going to wait for this red line. Yes, I know there's a little support there. And then when you get to the red line, bam. And yes, you're correct, Ruslan. Good point. You broke the trend line as well. If you drew a big old trend line on this bad boy, this area right in here is breaking the trend line. Retest and failure, and then you can get in after this wide range red bar. Find a lower time frame entry, and then bam. That's it. Bar by bar considerations. You have to go by, wow, I still have this many slides left? Damn, we gotta get moving on this. Okay, let the chart guide you guys. Wide range green bar, narrow range green bar with a bottoming tail. Looks good, 57.50 by 57.15, okay? But what do we get? Peekaboo break, less than 1/4 of an R over 57.50. No volume increase. Didn't stay above break even, topping tail. Now remember, I really shouldn't be doing this with the answer in front of you. I really should be doing it like this. Right? It should be done like that. And this is the way you guys should be doing it as well. You take a look at that. You have your 3-bar play. It peekaboos up. And you go, check, 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 check. 4 reasons that this stock is probably not going to do so well. Okay? Bam. Red bar comes in, stops you out, peekaboos, and keeps on going lower. Next. I blew this one up so you could see it. Wide range bar kind of takes out the resistance to the left. Topping tail, bottoming tail. There's a little fight going on right here. Wide range bar, narrow range bar. Oh boy. Topping tail, drop. Now, to be fair, it started down here. So at one point in time, all right? See, it might get to that, Ruslan. It might get to that. I still have 4 more slides after this. All right? At one point in time, this was, and this is how you have to think of this, right? That's what it looked like. At one point in time, it looked just like that. Looked just like that. Tell me that doesn't look pretty good. It does. Wide range green bar, little red bar. The depth of retracement there is a little bit more than I want to see. And then what happens? It goes right there is the bottom of the red bar, right? Okay. This thing moved all the way up. Starting to look good. Moves all the way up. And then, before the bar closes, bam! Hello. It's over. It's done. The problem is, there's not much you could do about it. right? It happened so quick, there's not much you could do about it. So sometimes you just take it on the chin. Here's another example. Wide range green bar with a massive bottoming tail. I mean, that is like the bee's knees. When you are looking, okay, when you are looking at 3-bar plays, this is really, really nice, right? The stock is breaking above resistance. It has a monster bottoming tail. That 3rd bar of the day, what a bottoming tail. Followed by a really nice resting bottoming tail. 198.75 by 197. Great start to a trade. I mean, really good start. I mean, this thing broke with follow through, volume increase, stayed above break even. What should we do? The answer is stay in it, and it still stops you out. Now, don't get me wrong. The topping tail right here would have been a significant concern. Now, to be fair, this is a $1.75 stop, and it went to almost 202. So you had at least 1.5 R in this thing, right? So even though you're up 1 to 1.5 R, it did everything you wanted it to do, but it still didn't really work. Now, I guess it did work to 2 R up here at 203, okay? But this thing started off perfect. Like every trade we take, you want it to start off like that. But then it got really sloppy and choppy. It's not always easy. The reason I'm commenting is some people might say, well, it went to 1 R anyway. Yeah, but what if it didn't? What if it did everything we talked about and only went half of an R and then did all this garbage? My point is we're not perfect. We're never going to be. We're never going to be right 100% of the time. But we need to be right most of the time. Okay? So this one, let's just assume for a minute, let's just bear with me, let's assume it didn't go to 1 R and it pulls back, chops around, then leaves the topping tail. I'm done at that point. When I see the topping tail, I'm going to break even. That's it. That's it. The wide range green bar, I'm going to hold on to it. Even the red bar, I'm going to hold on. Now I'm starting to really get concerned. Topping tail, topping tail. And then this topping tail, when this green bar, because remember, I got to do this all the time so you guys have a visual representation. No, that's not what I want. I want this, right? Remember, it used to look like that. It peekabooed back above the high of the day, and it used to look like that. So you had a high level of confidence. Like, oh, sweet. It took out all 3 of these red bar topping tails. We're good, we're good, we're good. And then, bam, topping tail. Nope, I'm moving to break even on this thing. Would have taken me out of break even. Bounced, then failed. What about this one? Forking is not always immediate. Here's a big old turnaround bar. Really nice turnaround bar. Right? A really nice turnaround bar right there at $34. Okay? Pops up to $34.30. Pulls back. And guess what? What was the warning sign here? Right? When you look at this, you're like, well, it left a bottoming tail right here. I'm actually kind of feeling pretty good about the bottoming tail. Right? It had an initial pop. Right? That was good. Popped like 30 cents. That's not bad. Okay? Pulls back, leaves a bottoming tail. That's pretty good. Now, could you have moved your stop to the bottoming tail? You could have. But it is a turnaround bar, so you might have said, it needs a resting period. It moved up 4 bars in a row. And then it does this and bounces back up. So in this case, I would definitely have my stop loss here. Okay, but the point is ultimately it failed, is what I'm trying to say. And you don't normally see big turnaround bars like this fail this badly. But this was an opportunity where you could have either raised your stop to below the bottoming tail, or you could have raised your stop to below the pivot. Because if you see a pivot like this do a 70% retracement and then fail, you don't want to be in it. The good news is if you did do that, you probably only lost about 1/4 of an R, 1/3 of an R, right? If you raise your stop loss to there, under that pivot, you probably only lost 1/3 or 1/4 of an R because it did bounce back up 70%. You got to wait for it to bounce. You can't just put it there. Let it bounce back up more than 50% and then raise your stop. Another example. Here's a stock that moves up, pulls back, leaves a bottoming tail, doji bar. Like, okay, not bad. The gap doesn't look too excessive. It's about a $2 gap, something like that. So it's big, but not crazy big. Pulls back, you get in the buy setup, you put your stop here or here, either one, and there's nothing you could do. It just rolled over so fast, there's nothing you could do. You could have maybe put your stop loss under that little bottoming tail. Nothing you could do. Then eventually you want to short it under 31.50, right? Eventually. It looks like a really good short under 31.50. And finally. Wide range bar, there is a big bottoming tail here. Okay, they're not perfectly equal highs. We get a 3-bar play, and what? It starts off really well. It starts off with a wide range green bar and a bottoming tail. And the red bar, while isn't perfect, it does stay above the bottoming tail. So you have no real reason to be concerned, and then just what happens? It just fails, breaks the low of the day, and then works. This is a tough one. Would you fork this? Probably not. There's no real great area to fork this trade on. Okay? So, took me a little while. It actually took me 2 hours and 15 minutes to get to this lecture. Guys, I want to reiterate this, okay? This slide, take a picture of it. It's very important. These are the things you need and want to be seeing before you get in. Clean pattern, relative strength, bottoming tail, picture of money, above resistance, below support if it's a short, igniting bar, right? Igniting volume, sorry. And then after you get in, you want to see all these things happen. Okay? If you don't, be concerned. Remember, considerations. What does the current candle tell you about the trend and the bars? Not only the current bar and the current 5-minute trend, but the higher trend too. Okay? And last, remember what's supposed to happen. We have talked about it several times today. It's either confirming or conflicting with your expectations. It's either confirming or conflicting, right? We talked about this. Confirming or contradicting. See it? Confirming or contradicting your expectations. You have to ask yourself, each bar, does this bar reconfirm what I was hoping to see, or does it contradict what I was hoping to see? And you do this every bar. Now again, if you're a set it and forget it all or nothing person, fine. Just let it go. But I do think it could be a very valuable experience to learn more about stocks and just get more in tune with bars, the market, and trends by doing this, even if you are an all-or-nothing trader. I know it might make you a little bit nervous when you see a red bar, but at least you're learning what the expectation is, either confirming or contradicting. And remember, each bar gives us new information. Use that new information to determine if the trade is more or less likely to work. All right? I'm Jared Wesley of Live Traders. I hope you guys learned a little bit about becoming a better trader by using candlesticks and bar by bars inside the trend. We'll get back at it again next week.